After experiencing a crisis in your personal finances, it is important to make a fresh start and get your financial affairs in order. Being able to set up and stick to a budget and learning how to use credit responsibly are key to helping you get back on track and remain on firm financial ground. It is also important to recognize the symptoms and behaviors that are the cause of financial problems and to learn to steer clear of them in order to make sure that money-related problems don't happen again. Let's examine some of the problems that lead to financial turmoil and ways to recover from them and continue to avoid them moving forward.
According to a study conducted by the Insolvency branch of Industry Canada, the majority of bankruptcies or proposals do not happen because of a single cause, and in most cases are as a result of several contributing factors, including the following: job loss and reduced income without changing spending habits, relationship breakdown and separation, unable to service joint debt loads alone, medical illness and issues, insufficient education on money management and credit use, business failure and tax issues, addiction issues such as gambling, alcohol, substance abuse, compulsive spending, vehicle-related expenses, large repayment terms, unexpected repairs, maintenance costs, and increased insurance premiums following an accident.
Another cause that can contribute to financial difficulty is stress. Stress can be related to many different situations in our lives and can very easily lead or contribute to financial problems. The following information is included to help you understand the early warning signs of stress and provide steps you can take to reduce it. Remember that there are organizations that can help you manage your stress if you feel you need to speak with someone. Some signs of stress are frequent headaches, stomach problems, being tired all the time, sleepless nights, tension, irritability, depression, and health problems.
There are many events that may occur in people's lives that can act as sources of stress. For example, changes in your family situation such as births or deaths, separation or divorce, or a family member leaving the home. As well, changes in your job situation such as being laid off, starting a new job, or having new employees starting where you work can also result in stress. Dealing with a decrease in income and possibly the subsequent need to overuse credit to make up for that lost income are also potential sources of stress. In addition, major changes to your housing situation such as a foreclosure or the purchase of a new home, or things like moving into a new neighborhood, or even a change in your usual routine can elicit varying degrees of stress. Finally, events in your personal life are things that you might also find stressful. Things like health issues or injuries, a new relationship, or perhaps the loneliness encountered by the ending of a relationship. Fortunately, if you do find yourself having to deal with more than your usual level of stress, there are ways to help you manage it. First, identify stressful events or situations and discuss the situation or event with family members or those who are close to you. Try to learn to deal with your stress by seeking medical advice or taking courses on how to deal with stress. Also, try to prioritize situations or events. It may be that you're simply expecting too much of yourself. Your physical health is also very important. Try to incorporate exercise into your weekly routine. As well, make sure that you're eating properly and that you're getting enough sleep. Finally, remember to take time to relax and give your mind an opportunity to rest.
Utilizing consumer credit is an important aspect of healthy financial practice. Credit cards and lines of credit are financial tools that can help you realize both personal and financial goals. However, it must first be understood and treated with respect. If credit is not understood and controlled, it can cause serious financial problems. Credit is debt after all, and it means committing future income to pay for things that you need or want now. When used responsibly, there are advantages to making purchases using credit. For one, credit is very convenient, and transactions made using a credit card usually offer 30 days of free credit. It also allows the user to take advantage of special bargains or sales when cash is not available. As well, a good credit rating makes it easier to borrow or get credit in the event of an emergency. Here are some questions to ask yourself before making purchases on credit. Do I need it now? Is it worth the extra credit costs to have it now? And are the interest costs reasonable? Will this purchase help achieve a family or personal goal? Will I still be using the purchase when I have finished paying for it? Can I buy it without committing an anticipated increase in income? And does my current source of income appear to be stable? Can I afford to make the payments? And can I make them on time and without skimping on necessities? Do we have an emergency fund to take care of unforeseen expenses? Is my credit good enough so that I can borrow in case of illness or emergency? Have I avoided dipping into savings to meet regular expenses? And am I always current in making payments such as rent or utilities? Do I avoid borrowing to pay off other credit or debt? And are my assets greater than my debts? Am I always honest with my spouse, others, and myself about my expenses? These are serious questions that deserve careful consideration, as abuse of credit is one of the ways people can get into financial difficulty. Consider the following guidelines for using credit responsibly. Develop a realistic budget and adjust your spending habits to live within your means. Be an informed consumer. Shop for credit the same way you would for goods and services. Seek financial planning assistance, such as agencies that can provide assistance, or books on managing your finances. Pay back credit used to meet unexpected expenses or an emergency as soon as possible. Minimize the number of credit cards you have. Have a plan for using credit. If you're going to use credit, use it to help you meet the personal and financial goals you have set for yourself. Also, never charge more on credit than you can comfortably pay off at the end of the month.
When you apply for credit or use a credit card or line of credit for the first time, your credit file is created. On a regular basis, companies that lend money or issue credit cards to you, including banks, finance companies, credit unions and retailers, send specific information related to the financial transaction they have with you to credit reporting agencies. There are two major credit reporting agencies in Canada, Equifax Canada and TransUnion of Canada. These agencies organize and store information so that it can be referred to in the future with your consent. When you apply for a loan or credit card, you are usually asked to complete and sign an application form. This application normally includes written consent that gives permission to the credit grantor to check your credit file when you first apply and for as long as the account is open. Each time a member of the credit bureau requests your file, your request is noted on your file as an inquiry. You can therefore see a complete record of who has requested your credit file and when the request was made.
Credit files also contain information regarding bankruptcies and consumer proposals. A consumer proposal allows you to settle your debts for an amount you can realistically manage or consolidate your debts with little or no interest. Policies regarding the time that a bankruptcy or consumer proposal may be reported vary from province to province, and they may change from time to time. Most provincial legislation provides that a first bankruptcy will remain on your credit file for 6 years after you complete the bankruptcy. A consumer proposal typically remains on your credit rating for 3 years after you complete your payments, but this can vary. To obtain details of current policies, we suggest that you contact Equifax or TransUnion. It's a good idea for you to review your personal credit file from time to time to ensure accuracy of the information. If you find any discrepancies, it's your responsibility to advise the credit reporting agency of this. The Superintendent of Bankruptcy will automatically notify the credit reporting agencies once you've completed your bankruptcy or your consumer proposal. However, you should still check your credit report at that time to make sure that all of the information has been correctly reported.
The goal of the budgeting process is to create a routine, comfortable, and rational plan for using income for saving and to pay living costs. Understanding how much money you have available each month and how you are spending it will help you understand what changes, if any, are required to your budget. Now that you have completed several months of income and expense reports, you should be able to assess how well you have been doing. It is important that you evaluate your progress and revise your budget accordingly. If you are unable to achieve your goals without running out of money, your budget needs to be revised.
There are three basic ways to balance your budget. The first is to decrease your expenses. The second is to increase your income. And the third is to both decrease your expenses and increase your income. There are many ways of decreasing expenses. Remember, decreasing your expenses will provide you with funds to balance your income and expenses, or to spend on other things such as goals or savings, or in areas that you feel are more important to you. There are also several ways of increasing income, including getting part-time work, looking into other work opportunities that provide higher wages, upgrading skills that might provide for an increase in wages, having other members of your household contribute by obtaining work, and researching government programs to see if you qualify for any income assistance or disability benefits. Remember, a budget plan is simply your plan for how you want to spend your money. Follow these steps to assess your budget needs. 1. Review your monthly statement and determine if your income is equal to or greater than or less than your expenses. 2. Review your regular monthly expenses. Are they all accounted for in your budget? 3. Review your irregular and annual expenses. Are they all accounted for in your budget? If not, you may want to make changes to reflect those expenses. 4. Review your goals and your savings. Are they reflected in your current spending? If not, you may want to make changes to your budget to include that expense. And 5. Determine if you need to decrease your expenses for certain items in order to balance your budget. To help identify your annual and irregular expenses, you might want to pull old receipts and cancel checks for that information. At this point, you might find it helpful to have a look at the budget worksheets on pages 22 and 23 of the accompanying workbook to help you record your budget and compare it to your actual spending over the past several months.
Your family is important when dealing with financial hardships. Not only do they depend on you for meeting many of their financial needs, but they can also provide you with emotional support during difficult times such as these. Here are some tips to assist you and your family in managing your budget. When preparing, reviewing and revising the family budget, try to include all family members old enough to understand in your discussions. This may allow members to feel that they are part of the decision-making process. Try to hold regular family discussions to review and, if necessary, revise the family budget. This ensures that changes in family needs are considered. Perform budgeting activities when you have quiet time and can avoid distraction. Try to obtain receipts to help ensure all of your expenses are monitored and recorded. Assign specific tasks to each family member to assist in making the budgeting process easier. For example, who will pay their bills each month? Who will do the grocery shopping? Who will be responsible for recording the monthly expense and balancing the budget? Remember to stay within your budget when shopping. And finally, put money that is specifically designated for annual or unexpected expenses into a separate savings account. Remember to review your budget regularly to see if any modifications are required to reflect changes in your personal or family circumstances.
Nobody enjoys bankruptcy or proposals, and after getting back on your feet financially, it is especially important to ensure that you won't have to go through the anguish of it a second time. Still, the danger of falling into the repetitive cycle is ever present. It is therefore essential to be alert to behaviors that might lead to another bankruptcy if they are not addressed when they first appear. One of these behaviors is the seeming inability of a person to trust anyone. For those who have gone bankrupt or filed proposal and who feel betrayed by a business or life partner, it can be difficult to find the middle ground between trusting too much and not trusting anyone at all. Those who feel this way might need to seek additional personal counseling. Another type of behavior to take note of is the tendency to blame others for your problems. Many people file for bankruptcy or file proposals due to situations beyond their control. However, there are also people who will say things like, I wouldn't be here if it weren't for those credit card companies who keep sending me credit cards. If you feel this way, you need to understand that you have the ability to not use credit cards. In order to maintain control over your financial affairs, you need to develop an understanding that you are responsible for your actions and ultimately your current financial situation. The biggest of the danger signals is the refusal of a person to acknowledge related problems. This is important because money management is not the only problem in most bankruptcies and proposals. If other factors such as alcohol abuse and drug or gambling dependencies are present, they will also need to be resolved, or there may be another bankruptcy in the future. There may also be less obvious but still related problems that also need to be addressed. This includes things like unhealthy relationships, in which a person who feels uncared for may overspend in an attempt to compensate. People suffering from depression may also engage in similar overspending habits. If you experience these feelings, you may want to seek additional counseling to help deal with your situation. If spending impulsively was a significant factor contributing to your bankruptcy or proposal, and there is no change in this behavior, there is a distinct possibility of another future bankruptcy or proposal. In order to break free of this cycle, you first need to recognize the problem and then seek additional help to deal with the situation. Finally, you may feel resentment towards the people who are trying to help you with your problems. Those who experience this feeling usually have to hit the financial wall one more time before they are open to change. However, while some will repeat a second bankruptcy or proposal, there are also those who recognize the warning signs in time and are able to work their way back to good financial health without having to go through it a second time.
While dealing with the anxiety of bankruptcy or proposal is something that nobody wants to experience, we hope you now see that if handled appropriately, there is light at the end of the tunnel. Knowing how to identify the pitfalls that can get you into financial trouble and how to avoid them can keep you away from problems. And if you're already in trouble, take comfort in knowing that there are ways of getting yourself out and staying out for good. Remember, regularly review, step back, and take an honest stock of your spending habits, attitudes, and behaviors. This will greatly help you achieve peace of mind and financial well-being, and it will go a long way to keeping your finances growing in the right direction.